Ladies and gentlemen, welcome back to the channel. I want to talk about why a huge rally might be coming very shortly for AMC stock. And we're going to look specifically at the positioning as far as the option chain for that April 27th option expiration, because the next major catalyst that we are aware of is going to be April 27th. And I say we are aware of because anything can happen. We could get a buyout price from Amazon tomorrow. Anything is possible, so do keep that in mind. But from where we currently sit now, boy, we could be setting up for something huge, and I think the markets are not seeing it, guys. So we're going to get into that. We are going to talk about everything you guys need to know with AMC. We'll also, as far as data-wise, let me be clear, and then I do kind of want to look at the charts as well and go over how high this could potentially take AMC. So let's get into it. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. So, first things first, guys. April 27th. We're going to get the court date. Now, AMC recently tried to lift the status quo. I think we all know this. Basically, don't get lost in the sauce. That just means AMC wanted to do the reverse split to pay out the settlement and to authorize more additional shares to raise more capital before April 27th. The judge said you cannot do that. We need to make sure everything is being done properly. Pretty much make sure all AMC common stockholders actually want this. The judge wants to make sure this is not something that is forced upon us without will, because after all, the vote was cooked, right? We know that. And that's the interesting part about this, is heading into April 27th, everyone thinks this is a done deal. Literally everyone. And if you don't believe me, take a look at the option chain for April 28th. First, let's start with this upcoming Friday's option expiration. 47.5% of the open interest is calls. 52.5% is puts. April 21st, 33.5% calls, 66.5% puts. Get this. April 28th. Are you guys ready for this? 9.77% calls for the open interest. 9%. We've never had an option expiration that low before. Never. Never happened with AMC. At least since, the whole meme stock saga started. 90.23% puts. It's actually laughable. Everyone is so convinced that AMC is going to fall like a rock after April 27th. Now, why do I say that's probably not going to happen? Why do I think this in and of itself, the ultra bearish positioning, will give us a rally? Pretty straightforward. The judge is not going to say, at least from my personal opinion, from my experience here in the markets, it doesn't look like the judge is going to just let this settlement happen and outright dismiss this whole litigation coming April 27th. They might eventually do that, right? But from my perspective, the judge is either going to want a new vote to see where AMC common stockholders are, because after all, we are the ones that would face the dilution. If you let APE vote and they have the same voting power as us in this arbitrage trade, that's cooking the vote, right? And I think the judge is very well aware of what AMC did there. So I think that's a possible outcome. I think it's a possible outcome that the judge wants to just hear more information. They might give us another court date for June. They might not say we need another vote until June. But either way, from my perspective, this is not over coming April 27th. Now, what does that mean? If everyone is over here thinking that the judge is going to dismiss this, the settlement's going to go through on April 27th, well, why do they think that? Well, I think people are really out of touch with this current situation. Hedge funds really don't understand the risk that is associated here. They might, but they're getting greedy at this point. When you see calls sitting so low, and a very real possibility that the judge extends this court litigation, doesn't let anything ultimately pass on April 27th, that is bullish for AMC stock here in the short term. That would be a very bullish thing coming April 27th. Now, so many people are weighted towards the put side, towards the short side, that you would get a colossal rally on April 27th, even if the judge did nothing but give you another court date, which is probably the most likely outcome right now. Let's be clear. I personally don't think the judge is going to say, yep, sign off on the settlement, boom, you guys are good to go. I don't think that is going to happen. That's what the markets are betting on right now. That's what these institutional investors are buying all of these puts for. That's it. The simple question is, do you think that is going to happen April 27th or not? Now, based off of them not lifting the status quo order, that leads me to believe these conclusions. So, given the super ultra bearish positioning that we are seeing, you likely get a rally, and a pretty damn big one after April 27th when the judge does extend this litigation process. Now, those are my opinions. I'm not a financial advisor. I do not have insider information, anything like that. So do come to your own conclusions. But I think that's the only logical argument right now. If you were to weigh the possibilities here, I think that is definitely the highest probability, is just getting another court date. Now, like I said, you've never, ever seen option activity this negative for a single option expiration. You literally have never seen that with AMC. Like, this is not a common occurrence, right? So I think for that reason, you're going to get a very big rally coming April 27th, maybe leading into April 27th as well, because after all, this whole option expiration of April 28th is so negative. Now, that's what I got on this big rally. Now, I do think from now until April 27th, you're going to probably be range bound, right? You're going to be up and down in between $4 and probably $5.50. And that's kind of what has been happening. On Wednesday, you were very bullish. Well, on Thursday, actually, you were very bullish, up 21% in regular trading, dropping 1.5% in after hours trading due to the judge not lifting the status quo order. So I do think you are still somewhat range bound heading until April 27th, but after that is when you could really start to get some upside momentum. Now, let's take a look at the data here first, and then we will go ahead and look at the charts as well. So, as far as the live short interest of free float, that is sitting at 25.12% and 130 million shares currently sold short. And I just want to say before we get further into this, the whole reason why this would be so bullish, if the judge just extended this litigation process to another court date, which again is probably the most likely outcome here, is because there's a lot of people that are short in AMC that would otherwise not be short in AMC. And if you look at the cost of borrow rates and where they have been just increasing every single day, that makes a very good argument, you know, to the contrary, that you should not be short in AMC. These cost of borrow rates being at 1,000% for the cost to borrow max, absolutely insane. Cost to borrow max is at 1,050%. Cost to borrow average on Thursday was 920%. Cost to borrow minimum was sitting at about 378%. So you factor in the risk here and the most likely outcome on April 27th with these high cost to borrow rates, that puts a lot of pressure on these hedge funds that are short, that again otherwise would not be short on AMC. If you take a look at Interactive Brokers, short availability, 390% was the cost to borrow rate last update that we did get. 200,000 shares that were available. Keep in mind, Interactive Brokers tends to have the lower end of the cost to borrow rates because they serve more institutional clients, right? So they're all going to vary, but Interactive Brokers seems to have the best cost to borrow rates, usually across the board, but still almost 400% on Interactive Brokers. You need to see a drop, and you need to see one quickly when cost to borrow rates are this high. That's insane. I mean, if for an example, you're shorting AMC, let's say $1 million. Keep the math simple here. Well, 390% cost to borrow rates, call it 400% cost to borrow rates. You're gonna end up paying $3 to $4 million for a year just to have a $1 million short position. That's a lot. And imagine if that's $100 million short position. Then you're paying $400 million a year just to be short on AMC. That's insane, right? So you need to see a drop quickly, and shorts get out of their short positions. This is what really helps to put that upside pressure on shorts to cover on those positions. That's what it comes down to. Now, what we seen last week as well, very interesting, especially on Thursday. We seen 305 orders totaling $98.5 million, positive order value of 2%. It's funny because AMC's up 21% on Thursday, and it's the first big opportunity shorts have to go short in AMC again, and they piled in almost $100 million worth of additional put positioning, right? Bearish positioning on AMC, which just shows the lack of risk management here. There is absolutely no risk management when it comes to this arbitrage trade with AMC, and that's what makes it, or will make it, so aggressive to the upside. When there's no risk management, when there is no due diligence going on here, no concept of what could possibly happen that could be bullish for AMC here, which there's a lot of those outcomes. We've talked about it here in this video so far. Well, that can induce panic for the shorts to get out of those short positions when the trade does not go their way. It's a little different than like AMC just having a high cost to borrow rate and chugging along, right, without any big events or reasons why people are doubling down on all these short positions, which they have done. It's a little bit different compared to now, where everyone is piling in, expecting this trade to go through, like literally expecting this. Think back to the April 28th option expiration. Everyone's expecting this to go through. If it does not go through as fastly as they expect, that's like a, whoa, guys, what's going on? That would be like Apple if they came out and lost money when they report earnings this upcoming quarter. Everyone would hit the brakes so quickly that stock would drop 20-25%, even in Apple, because nobody would have expected that. And that's what you're setting yourself up for right now. And the only way that ends is with a huge rally with AMC stock. Now, as far as the last week, some huge option activity, 803 orders totaling $258.55 million. Now, if we take a look at the Stocko tracker data for the actual expiration of April 28th, you can see calls in the money sitting at about 5,000, calls out of the money at 21,000, puts in the money at 19,000, and puts out of the money at 223,000. And that's where you're getting this super low positive order value. It's because of these huge amount of puts that are still out of the money. And if we go ahead and actually take a look at the option chain here for let's go ahead and look here, April 28th, where are all of the puts? Jeez, most of the puts concentrated at the $3 strike, the $3 strike, and the $2 strike. Come on now, give me a break. You do have 3,500 for open interest that is currently at the 450 put. The $4 put has almost 10,000 for open interest, and the 350 put has almost 5,500 for open interest, and that $3 put, yeah, that is definitely dominating the option chain as of right now, and that really just looks very unlikely. Those options dropped 74% on Thursday for good reason, but they were eaten up on Thursday. So hopefully you guys are understanding what I'm saying here and the implications for what I'm saying, because it's gonna get pretty damn crazy pretty quickly, especially when you get down to April 27th. You're gonna have a huge move regardless. You're gonna have a 20, 30, 40, 50% up day or down day, potentially. Just depends what the judge does do. But I think any logical common sense here would be at least another court date so the judge can figure out, is this a good solution for all common stockholders? That's what he alluded to in the decision making, to not lift the status quo order. So I think it's only logical here. And that's where it makes the risk to reward profile very good, because it's not like AMC is sitting at the highs of a rally, right? You're sitting at almost a 52-week low still, even after you rallied 21% on Thursday. And AMC stock is currently trading at $4.82.5. Like I said, you are going to be range bound in between about $4 per share and about $5.50 per share. In my personal opinion, $5.50 per share would put it at about this 100-day moving average. So I do think you're in this range until April 27th, unless, again, new information does come out, like the Amazon deal, a potential price target on that. You know, that is what could really move the stock as of right now. I don't even think earnings are going to be that big of a deal when they do come around. It just depends on what happens April 27th. Now, coming April 27th, I do expect a massive rally. I do. And I think that could easily place you to $10 to $15 per share. Easily in this range. All depends on what the judge does say. If he outright says, yeah, this reverse split, not going to happen. Not going to happen in the way that it's being proposed to happen. Well, that's where you get more on that probably $20 range, if not higher. If this does trigger a full-on short squeeze, you could easily break new highs. That's how overweighted shorts are in this short position. You could easily break out to new highs if the courts were to say, yeah, this isn't going to happen, because all the shorts that were a part of this trade would rush to get out of those positions. And even if they didn't, they're going to go out and buy a lot of calls to protect themselves and make sure they don't lose everything. So I think either way it goes, you get a rally after April 27th. Just to what degree of bullishness is it? Does it cause the MOAS? Because that's a very real possibility at this point. Or does it cause a 20, 30, 40, 50% rally and boom, that's it? Depends on what the judge has to say and what he decides will be done. So, those are my thoughts on this current situation. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. I want your guys' opinion on this argument here, because I think it's pretty straightforward. But if there's something I'm missing, by all means, feel free to post it down below in the comment section. And if I truly did miss something and I'm not seeing something here, well, I'll feature that in another video and give you full credit for it, because you got to give credit where it's due. And I don't really think we missed anything here in this video. I think we got a pretty clear picture on what is going on and what's likely to happen with AMC. So that is all, guys. Like I said, hit the like button, subscribe to the channel, all of that good stuff. If you guys also want to come trade with me live in real time, link down below in the description of this video. You bet your ass we'll be trading the out of this event coming April 27th. You definitely want to have some skin in the game as far as some options as well. The risk to reward just looks so good right now. you can't afford not to if you're in AMC and have been in AMC. Not financial advice. Again, if you can or can't afford options, that is on you to come to your own conclusions on that. Me personally, I think it makes a lot of sense, guys. So thank you for watching. Enjoy your weekends, and I will see you in the next one.